Jim, I really want to tackle Greenspan, right? And actually, I liked where Lizzie left off, which was talking about this debate right now. Are Treasury yields a canary in the mine, or are they actually a sign of confidence in the U.S. economy? I mean, you're dealing the bond markets all the time. What is your view?
Well, this is a very complex topic, particularly as it pertains to the discussion that's going to take place today with the FCIC and Greenspan. I don't think anyone would argue that a measured approach to raising interest rates as the economy gets better is a proper approach. So I don't necessarily fully agree with Greenspan's assertion, but I do agree that we're going to see rates go up, particularly short-term rates go up. I think the accommodative stance that we had with short-term rates served its purpose with the economy, and we needed to have those funds. We needed that liquidity. But now a measured approach to raising interest rates is called for, so I'd be in the Geithner camp.
With Greenspan, though, in particular, I mean, you've been listening and reading what he's, what he's wrote, and also the interview here on Bloomberg where he talked about these Treasury yields, but also about subprime lending. Do you believe, do you buy his argument as to why the Fed missed the ball on that?
This is a very complicated subject. I think I've read every book that has come out on the financial crisis, almost everything that's been printed on the subprime crisis. And one thing that jumps out at you is that the regulatory aspects of the responsibilities of the Fed are the ones most in question. Not necessarily whether short-term interest rates were kept low for too long, but did the Fed do its job as a regulator?
Right.
To me, what Greenspan is going to have to do today and going forward, and to take this sort of tarnish, if you will, off of an illustrious great image, is deal with that issue.